After hitting its lowest point in 2 years, questions are swirling about how low might it go and what it means for Canadian economy and everyday Canadians. Could this drop signal deeper trouble ahead, or is it a rebound in sight? Stick around as we uncover the driving force behind the plunge and what it could mean for your financial future. The Canadian dollar has recently experienced a significant drop, hitting its lowest point in 2 years. This news sends shockwaves through the financial sector, leading many Canadians to ask, where is our currency headed from here? Today we are examining the story behind this shift, discuss its driving force, and discuss what it could mean for Canadian economy and everyday Canadians. Mainstream media is now covering the Canadian dollar's fall, and historically, when this happens, it's often followed by a temporary bounce. But is that really what we're likely to see? So, where exactly does the Canadian dollar stand today? At the time of this recording, the loonie is trading at 71.71 cents against the US dollar, marking it the lowest point since 2022. Interestingly, this low point was also reached in October of that year, making it an iconic repetition of history. This 2 year low is significant not only because of the number, but also because of what it represents. The dollar's value influences everything from imported goods prices to travel expenses and Canadians' overall buying power. To put this in perspective, if the dollar breaks below this threshold of 71.58 cents, we could see a drop around 68 cents. Affected the economy. This decline has concerned economists and financial experts who now question what this could mean for Canada's economic future. If the Canadian dollar continues this downward trend, it would make imported goods more expensive, further fueling inflation and impacting the average consumer wallet. For Canadians, staying informed about the dollar's value isn't just something for financial analysts to worry about. It's crucial for everyone. But here's an interesting point. How many Canadians outside finance circles know that the Canadian dollar's current situation? Finance professionals, economists, and traders monitors the dollar performance daily, but what about the general public? If you're watching this video, share your thoughts in the comments. Are your friends, family members, or co-workers talking about the Canadian dollar's weakness? Or is this mainly being discussed only within finance circles? When the mainstream media covers a story like this, we often see short-term market reactions. This doesn't necessarily indicate a lasting change in the long-term trend. The Canadian dollar's trajectory has been steadily downward, and it's difficult to imagine a quicker reversal. However, the history tells us that temporary relies on happen. Earlier this summer, for example, we saw the loonie briefly rise to nearly 74.50 cents against the US dollar. This was likely to the response of various market conditions and monetary flavored the Canadian dollar. If the dollar breaks through the current low of 71.58 cents, the next significant support level would be around 68 cents. Reaching this level could signal more profound economic challenges for Canada, as the whole dollar would the cost of imports could significantly impact Canadians' buying power. Now let's dive deeper into the factors driving the decline. One primary reason for the Canadian dollar decline is the economic divergence between Canada and the United States. While both countries grapple with their financial challenges, the US economy has shown relatively resilience, and the US Federal Reserve recent decisions and the country's strong economic indicators suggest a more stable financial environment than the Canada's. This divergence makes the US dollar a more attractive currency for the investors, causing the Canadian dollar to lose value in comparison. The US economy has benefited from substantial job numbers, higher consumer spending, and a stable housing market. While inflation remains a challenge, the perception is that the US economy can withstand these pressures better than Canada's. However, some experts urge that upcoming US election may skew the perception, as economic data can sometimes be manipulated or presented in ways that favor the incumbent. Once the election is over, we may see a shift in how these economic indicators are reported and possibly a different reality emerging. In contrast, Canada faces many economic challenges that pressure the Bank of Canada to act. Economic growth in Canada has been sluggish, with signs that the country might even be heading toward a recession. The Bank of Canada recently cut its key interest rate by a substantial half percentage point, bringing it down to 3.75%. This marks the fourth consecutive rate cut, signaling that the central bank is taking serious steps to address economic concerns. When central banks begin a series of rate cuts, it's a sign they're preparing for more challenging economic times ahead. Rate cuts are typically used to stimulate the economy by making borrowing cheaper and encouraging consumer spending and businesses investment. However, these cuts also devalue the currency, which is one reason the Canadian dollar has been on a downward. Economists predict that the more cuts may be on the horizon if Canada's economic outlook. Oil prices are another factor that once heavily influenced by the Canadian dollar but has become less significant. Canada has traditionally been viewed as a commodity driven economy, with oil prices playing a substantial role in the value of its currency. However, this relationship has weakened recently as global currency markets have become more diversified and less dependent on any single commodity. While oil prices impact the Canadian dollar, they are just one of the many factors in the much larger, more complex equation. Right now, oil prices are hovering below $70 per barrel, which could typically create a headwind for the Canadian dollar. However, the correlation between oil prices and the dollar value isn't as strong as before. Many economists argue that while oil prices do have an impact, they are not the defining factor they used to be. Instead, the global economic trends, interest rates, and the trade policies play a much more significant role. Trade tensions, particularly between the US and Canada, could significantly impact the Canadian dollar. If specific trade policies or agreements such as potential trade barriers or tariffs come into play, the loonie could face additional downward pressure. Additionally, the upcoming US election adds another layer of unpredictability, especially if the results lead to a shift in trade policy. Unfavorable to Canada, what happens if we experience another global financial crisis? Looms large, especially considering recent banking challenges in both the US and in China. International finance crisis tends to drive investors toward the US dollar as a haven, a currency they perceive to be more stable in times of uncertainty. If such a crisis were to occur, the Canadian dollar could plummet even further, potentially reaching new lows that could make today's values look favorable in the comparison. Reflecting on the past back to October 2022, we saw a similar situation unfold in the United Kingdom. The British pound hit record lows before staging a significant rally. We've observed this pattern of reaching low point followed by a bounce across the various markets. Often when the currency markets reach a critical low, they become attractive to investors, creating a buying opportunity that leads to a temporary rally. While we can't say with certainty that the Canadian dollar is nearly at that point, it's a scenario worth considering. The Bank of Canada's recent rate cut wasn't a surprise, as many had anticipated some intervention. However, the size of the cut, half a percent point, did signal the bank's concern for Canada's economic outlook. While this cut may provide short-term relief, it also devalues the Canadian dollar, making imports more expensive and further squeezing the Canadian consumers. Looking ahead, any unexpected economic shock or announcement could influence the dollar's value and add more uncertainty to the currency's future. The US economic data also influences the Canadian dollar. Adverse reports from the US can sometimes lead to unexpected outcomes for the loonie. Historically, there's been no clear pattern, as currency reactions are often go either way. Even with negative US economic news, the Canadian dollar doesn't always benefit, as traders weigh multiple factors, leading to unpredictable, almost 50-50 chance of which way the currency will move. In uncertain times like these, staying informed is your best tool. Knowledge is power, whether it's monitoring the Canadian dollar or understanding how global economic shifts can impact you directly. If you found this deep dive helpful, give this video a thumbs up, share it with friends and family who might benefit, and consider subscribing for more insights on the financial trends that matter. As always, please leave a comment below with your thoughts. Do you think the Canadian dollar will bounce back, or are we at the edge of something bigger? Thanks for watching.